Have you ever heard of people using cash to, like, light their stoves?
Wow, that's
Sounds crazy, right?
yeah.
But it happens.
Yeah.
That's the reality of hyperinflation.
Yeah.
Today, we're going on a deep dive into this wild world.
A deep dive.
Exactly, a deep dive into hyperinflation. We'll explore what causes it, what it looks like in the real world, and what it means for us, today.
It's a fascinating topic and, probably more relevant than a lot of people think, especially with the rise of all these digital currencies like Bitcoin.
Exactly. So let's just start with the basics. What exactly is hyperinflation?
Well, I mean, everyone knows that inflation is when prices go up.
Right.
But hyperinflation, that takes it to like a whole other level. It's
Yeah.
extreme. The economist, Philip Cagan,
Okay.
he defined it as a monthly inflation rate of over 50%
50% a month.
per month. Just let that sink in for a second.
Wow.
50% or more every single month.
So that means that the price of, let's say, a gallon of milk could double in just a couple of months.
Yeah, you're talking weeks, maybe even days in some cases.
Oh, wow.
It means your money is losing value so rapidly. And that can be, incredibly destabilizing for like individuals and entire economies, of course.
Right.
Imagine, if you will, your savings could buy a full grocery cart today,
Yeah.
but then next month, you can only buy a loaf of bread.
That's a scary thought.
Yeah. That's the kind of impact that we're talking about.
So to really understand this, let's dive into some real-world examples. One of the most famous cases of hyperinflation is Germany after World War I.
Yeah. A post-war Germany was just like the perfect storm for hyperinflation.
Yeah.
I mean, you had a country in ruins burdened by war debts,
Right.
and they had those heavy reparations imposed by the victors.
I remember reading about people using wheelbarrows full of cash
Yeah.
just to buy a loaf of bread. It's hard to even imagine.
It's mind-boggling. And what's really interesting here is that the hyperinflation, it wasn't just because of like economic hardship, right?
Right.
A key factor was that Germany, they abandoned the gold standard during the war.
The gold standard. Now, what does that mean exactly?
Okay, so imagine you peg your money to something, to the value of a limited resource, like gold, for instance.
Okay.
That's the gold standard. It's supposed to stop to prevent government from just printing too much money, right?
Right.
Because the amount of currency is directly tied to their gold reserves.
So in Germany, went off the gold standard.
They went off of it, yeah. It basically opened the floodgates to just printing money like crazy.
And I'm guessing that didn't end well.
Not at all. No, it did not. To pay off its debts, Germany started printing, massive amounts of paper money.
Yeah.
But printing more money doesn't create more wealth.
Right.
It just devalues the existing currency.
It's kind of like flooding the market with a product.
Yeah.
The more there is, the
That's
less valuable it becomes.
Exactly. And then, to make matters worse, when the Allies demanded these reparations in other currencies, other than, the German mark, the government had to buy foreign currency.
Oh, I see.
Which fueled the inflationary spiral even more.
Wow.
This led to those infamous scenes of Germans burning money for fuel.
Right.
Because it was literally cheaper than firewood.
Wow.
It really just illustrates, the complete collapse of trust in a currency.
So it becomes more than just numbers.
Oh, absolutely.
It's about people losing faith
Yeah.
in the entire system.
Yeah.
But Germany after a world war is one thing, but could this happen in a country that's actually rich in resources?
Oh, absolutely. Take Venezuela, for example.
Venezuela?
Yeah, despite having these vast oil reserves, Venezuela has been dealing with just a devastating economic crisis and severe hyperinflation in recent years.
Yeah. And their inflation rates they're truly mind-boggling.
Oh, they are. Venezuela's inflation surged from 69% in 2014 to an astounding 181% just a year later.
Wow.
And by 2016, it was undeniable hyperinflation. Rates were exceeding 800%.
So how did this happen? How did a country with so many resources end up like this?
Well, it's a complex web of different factors, but economic mismanagement and corruption, those played major roles. Government policies like price controls and, nationalizing industries, all that stuff just backfired and really crippled the economy.
And then instead of trying to fix these underlying problems,
Right.
they resorted to just Printing more money.
They just kept printing more money. And as we saw with Germany, that just makes things worse.
It makes things so much worse.
Yeah.
Now, didn't they try to introduce a new currency?
Yes. The sovereign bolivar.
The sovereign bolivar in 2018.
Yeah. And wasn't that basically just the old bolivar with like 5 zeros locked off? Yeah, basically. And economist Steve Hanke, he argued it was just a cosmetic fix.
Like rearranging deck chairs on the Titanic.
Exactly. It didn't address the root causes, right? Without fundamental policy changes, just changing the name of the currency or how it looks doesn't solve the problem.
It's a good reminder that you can't just ignore the economic fundamentals. So we've got Germany and Venezuela, two very different countries.
Right.
Yet they both experienced hyperinflation. Is there some kind of common thread here?
You know, there is. Both of these cases show how economic instability, and this is often made worse by government policies, can really erode trust in a nation's currency. And that leads to this desperate search for an alternative, something else to store their value.
Right. Which brings us to, the whole rise of these cryptocurrencies like Bitcoin.
Exactly.
So could these digital currencies actually offer a solution in a situation like Venezuela?
That is the question that many people are asking. Cryptocurrencies, especially these decentralized ones like Bitcoin, they're seen as a potential hedge against hyperinflation because they operate, independently of governments and central banks.
So if your national currency is collapsing, you could protect your savings, at least theoretically, by holding Bitcoin.
That's the idea. And we are seeing this happening in countries that are experiencing hyperinflation.
Oh, wow.
Where people are turning to Bitcoin as like a more stable store of value.
Right.
And as a way to conduct transactions outside of this collapsing system.
So it's almost like a digital life raft in a sea of economic turmoil.
Exactly.
But is it really that simple? Are cryptocurrencies the answer to hyperinflation?
Well, it's not quite so black and white. I mean, cryptocurrencies, they do offer some possibilities.
Right.
But they also come with their own set of, complexities and challenges.
Okay. This is where things start to get really interesting. Now, before we dive deeper into the world of cryptocurrencies, let's look at one more case of hyperinflation. One that hit, I'd say, particularly close to home in the 21st century.
Oh, okay.
Zimbabwe.
Interesting. Zimbabwe, huh?
Yeah.
Interesting. So Zimbabwe, it actually had a pretty decent economy after gaining independence back in 1980.
Really? I always thought of it as a relatively stable country.
Yeah.
So how did they end up facing hyperinflation?
Well, things started to, kind of unravel in the 90s. They introduced this program, the Economic Structural Adjustment Program. It was meant to, liberalize the economy.
Right.
But it ended up having some pretty unintended consequences.
I see. And didn't their land reforms also play a big role? I mean, I vaguely remember something about that.
Oh, absolutely. The land redistribution program, while, it was intended to address these historical inequalities, it actually led to a really sharp decline in agricultural production.
Oh, wow.
So you've got that coupled with, some economic mismanagement, and then a drop in investor confidence, and bam, you've got the perfect recipe for hyperinflation.
So the government's response was to just print more money.
Yep.
But didn't they learn from history that just doesn't work?
You'd think so, right? But as we've seen, when governments are facing these economic crises, printing money can seem like the easiest solution, even though it's super destructive.
Yeah, it's like using a credit card to pay off another credit card.
Exactly. You get some temporary relief, but you're just digging a deeper hole.
Exactly. So how bad did it get?
Okay, so by 2004, the annual inflation rate was a whopping 624%.
Wow.
And just 2 years later, it had skyrocketed to 1,730%.
That's insane. But I feel like I've read that it actually got even worse than that.
Oh, yeah. It got much worse. By July 2008, Zimbabwe's annual inflation rate hit 231,150,888%.
Yep.
And get this, Professor Steve Hanke, he calculated that it peaked in November of that year at a mind-blowing 89.7 sextillion%.
Sextillion? I mean, is that even a real number?
It is, unfortunately. It's a number with 21 zeros after it. I mean, the scale of this kind of inflation, it's hard to even wrap your head around. Zimbabwe actually has the unfortunate title of the second worst hyperinflation episode in history.
Wow.
Right after Hungary, it was just devastating. People's savings were completely wiped out. Businesses collapsed. The entire economy was just brought to its knees.
So what did they do? I mean, they couldn't have just kept going like that. Did they just abandon their currency altogether?
Pretty much, yeah. In 2008, they officially ditched the Zimbabwean dollar. They adopted a multi-currency system,
Okay.
allowing people to use foreign currencies, mainly the US dollar and the South African rand.
Wow. So they had to just completely switch over. That's a pretty drastic measure.
It was a last resort, but yeah, it was really the only way to try to restore some kind of stability.
It sounds like Zimbabwe's story is like a giant warning sign about the dangers of hyperinflation
Oh, absolutely.
and how important it is to have, sound economic policies in place.
It really highlights the human cost of these crises. Imagine waking up one day
Yeah.
and finding out that, like, all your savings, everything you've worked for, is worthless. It's a nightmare.
It is a nightmare. And it just reminds us that hyperinflation isn't just, some theoretical thing in economics textbooks. It has real consequences that hurt real people. So all these historical examples that we've talked about, they make me wonder, could hyperinflation happen in a more developed economy, like, let's say, the United States?
That's a question a lot of people are asking these days, especially with, all the government spending and money creation that we've seen lately.
It does make you think.
It does. And while, the circumstances are different, the basic principles, they're still the same. When trust in a currency erodes, people are going to look for other options. And in today's world, that could mean turning to these cryptocurrencies.
So does that mean that cryptocurrencies like Bitcoin, are they the answer to this problem of hyperinflation?
Well, that's the big debate, isn't it? They have potential, for sure, but there are also risks. And it's important to understand both sides before, jumping to any conclusions.
Okay, so let's unpack that a little bit.
Yeah.
What are some of the potential benefits of using cryptocurrencies in the situation where, you've got hyperinflation going on?
All right, so the people who are really into crypto, they argue that these digital currencies have some serious advantages over traditional currencies. Like, for one thing, they're decentralized. So they're not controlled by any single entity, like a government or a central bank.
So no one can just decide to print more Bitcoin and devalue everyone's holdings.
Exactly. The supply of Bitcoin, for example, is capped at 21 million coins. It's written into the code. It can't be changed. So that makes it a scarce asset, kind of like gold, which a lot of people see as a good hedge against inflation.
That's interesting. So theoretically, if hyperinflation hits and a regular currency crashes, Bitcoin could hold its value because its supply is limited.
Precisely. Another big plus for cryptocurrencies is that they're borderless. You can send them across borders really easily without needing banks or anything like that.
I see.
And that's really helpful in countries that have strict capital controls or where the regular financial system is just not reliable.
So if you're living in a country with hyperinflation, you could use cryptocurrency to keep your wealth safe and even do things like buy stuff or send money to family.
That's the idea. We're actually seeing this happening right now in places like Venezuela. People are using Bitcoin to buy things, pay their employees, and send money to relatives in other countries.
Wow. It's like a whole parallel financial system is popping up, all based on these digital currencies. But can't all be good news, right?
Right. Cryptocurrencies aren't a magic solution. They come with their own risks and downsides, too. It's important to be aware of that.
Okay, so what are some of those downsides? Why wouldn't everyone just switch to Bitcoin if it's so great?
Well, volatility is a big one. The price of cryptocurrencies, Bitcoin especially, can change a lot really fast. I'm talking like double-digit percentage swings in a single day sometimes.
So even though the value of Bitcoin might be going up in the long run, those sudden changes could be a problem if you need stability during an economic crisis.
Exactly. Imagine trying to buy groceries with Bitcoin when the price is going up and down like a roller coaster. It'd be a nightmare.
Yeah, I could see that.
And then there's the issue of, cryptocurrencies are still pretty new. A lot of people are starting to use them, but it's still just a small percentage of the world's population. So it's not like you can walk into any store and buy stuff with Bitcoin, especially in places dealing with hyperinflation where people might not even have reliable internet access.
That makes sense. And I guess there are also security risks too, right?
Absolutely. Cryptocurrencies are digital, so they can be hacked or stolen, just like anything else online.
Right. So it sounds like, while cryptocurrencies might have some benefits, they're definitely not without their challenges. It sounds like the jury's still out on whether they're the solution to hyperinflation.
Yeah, I think that's a good way to put it. It's an ongoing conversation and a really fascinating one, too. And it's something we'll keep exploring in the next part of our deep dive.
So we've taken this deep dive into hyperinflation, looking back at history, seeing its impact on economies and, just people's everyday lives.
Real people.
Yeah, real people. We've seen how it can just completely turn your world upside down, where, your money is worth less and less every day. It's a wild thing to think about.
Yeah. We've seen those common threads that connect all these crises. Economic instability,
Right.
which is often, made worse by government policies.
Right.
And ultimately, it just leads to this loss of faith in traditional currencies.
And that brings us to, this really interesting question. Are cryptocurrencies, are things like Bitcoin the answer? Are they like the safe haven in a world where, our traditional currencies seem more and more fragile?
That is the question that's sparking a lot of debate.
Yeah, I bet.
Big time.
So you've got the crypto enthusiasts, right? The digital gold rush pioneers who believe that crypto is the solution.
Totally.
A decentralized and secure alternative, right?
So you see it as that, yeah.
To these failing systems that we have.
They point to that fixed supply of Bitcoin, how it's, separate from government control and, how you can easily do transactions across borders.
Right.
That's a big one, especially in those places with strict capital controls or, shaky financial institutions.
And then you've got the skeptics, the people who question, well, how volatile these cryptocurrencies are.
Yeah.
The whole, the technology behind it, the blockchain,
right.
the potential for fraud. It's a largely unregulated market. So there's a lot of concern there as well.
Oh, for sure. I mean, they highlight how Bitcoin's price can just swing wildly. So, if you're looking for stability during a crisis, it might not be the best option.
Right. Plus, not everybody uses crypto.
Exactly. It's not widespread yet, and doing transactions in Bitcoin can be tricky.
Right.
Especially for people who, don't have easy access to technology or reliable internet.
So it sounds like there's no easy answer here.
There isn't. I mean, the reality is cryptocurrencies are both an opportunity and a challenge.
So it's like we're at this crossroads.
Yeah.
With the evolution of money, right? We've got the traditional financial system on one hand with its central control and, it's susceptible to inflation,
right.
and government manipulation.
All of that.
And on the other hand, we've got this whole new world
of
decentralized finance, powered by this blockchain technology with its promise of transparency, security, individual empowerment.
Yeah.
But it's uncharted territory. Right. We don't know what's going to happen. So the question is, are we willing to embrace that uncertainty?
Are we ready to navigate this new financial world? I think that's the big question.
Yeah. And it's a decision that requires, really careful thought. Because the financial world is changing. And, if you don't adapt and evolve,
you'll get left behind.
Get left behind. We've seen how hyperinflation can wipe out your savings.
Devastating.
Devastate economies. Just wreak havoc.
Yeah. But it's also shown us how resilient we can be.
Right.
How we adapt, how we innovate, and how we find solutions, even when things look really, really bad.
And the thing is, the story of money, it's not over. It's still being written.
That's right.
And while we don't know what the future holds, one thing's for sure. Knowledge is power. If we understand how hyperinflation works, what the potential benefits and risks are of these cryptocurrencies, we're more equipped to make good financial decisions.
It's about taking control of your financial future.
Exactly. So as we wrap up this deep dive, I'm feeling, a sense of caution, but also optimism. Hyperinflation is a real threat, but it's not like we're helpless.
Right.
By understanding history, embracing new ideas, and, making smart choices,
being informed,
we can create a better, more resilient future.
Absolutely. Keep learning, keep exploring, and keep thinking critically. The world of finance is changing, and it's up to all of us to stay informed.
Thank you for joining us on this deep dive into the world of hyperinflation and the future of money.